What is up, everybody? PayPal reported earnings last week. It was a pretty decent report. However, the market didn't like it. Stock was down about 8-9% on the day their earnings came out. It was $78 beforehand. It's $68 now. So we're going to be taking a look at their earnings. We're going to be deciding, is this a buy today? Does it offer a good opportunity? If you don't know, I do have a small position in PayPal, so I will let you know what I'm doing with my money here. As always, if you get value out of the video, subscribe to the channel. I cannot believe that we have passed 1,600 subscribers here, so thank you so much to everyone who has followed. Now, let's jump into PayPal. Overall, there was a lot to like in this report. They grew total payment volume 5%. They grew revenue, the top line, 5%. This was a beat. I think the consensus estimate on revenue was about $8.1 billion, so they outperformed by about $200 million here. Pretty good. And transaction margin grew at 7%, so a little bit faster than the top line. Over the past couple of years, PayPal, under their CEO, Alex Chriss, they've shifted their focus to more profitable high margin areas like branded commerce and card services. So it's great to see some results here. Transaction margin growing faster than revenue is what I want to see. And the bottom line number definitely beat expectations. $1.40 on adjusted earnings per share, up 18% year over year. Now, some of this improvement is strong margins, and some of it is due to their share buybacks. I mean, they've been reducing the share count. So when you look at earnings per share, if you reduce the number of shares, it's going to be a tailwind to your earnings per share growth. Free cash flow in the quarter was down quite a bit. So maybe this is something that investors didn't like. But keep in mind, free cash flow is a very lumpy metric. Cash flow, it goes up and down. I mean, even here, if you just look at this little graph here, you got the blue line is operating earnings. The green lines are measures of cash flow. So red is operating cash flow. Green is adjusted free cash flow. I adjust for share-based compensation. And you see that the cash flow, even when you're measuring on a full year basis, I mean, it jumps up and down. You can have big changes in working capital with a company like PayPal where you have, buy now, pay later offerings. That can really make the cash flow quite different from the operating earnings. To be honest, the free cash flow number for the quarter does not concern me at all, and management is reiterating $6 to $7 billion of free cash flow guidance for the year. Now, their free cash flow guidance does not take into account share-based compensation. The share-based compensation for the year is probably going to be a bit over $1 billion, 1.1, maybe $1.2 billion for the year. So if you subtract that out and you adjust their free cash flow for this, you're probably looking at $5 to $6 billion in free cash flow for the year, which for some, really quick back of the envelope math, this is a $65 billion company right now. So if they're generating $5 to $6 billion in adjusted free cash flow, that's a free cash flow yield of 7.5 to 9-ish%. It's very hard to find quality companies in this market with a free cash flow yield that is that high. And they're pretty much returning all of that free cash flow to shareholders in the form of buybacks. In the quarter, they say they returned $1.5 billion to shareholders in the form of buybacks and $6 billion over the past 12 months, reducing shares by 7%. You're getting paid to wait with this company, and they just beat on the top line, on the bottom line, and they also increased their guidance for the full year. A lot of people refer to that trifecta as a triple beat. They're now guiding for 11 to 14% growth on the bottom line, which even if you account for the 7% in share reduction, this is basically 4 to 7% growth, ignoring the decrease in shares. That's not too bad. And they have no intention of slowing down the share buybacks here. They're saying, for this fiscal year, we're going to buy back $6 billion in stock again. As I said, there's a lot to like in this report. Venmo grew at its fastest rate in the past few years. Now, one thing I wish PayPal told us was their profitability across these different segments. The take rates on Venmo are very low. I imagine their profitability here is also extremely low, but they don't tell us. They don't give us this data. Accounts were up only by 2%, which is small, but still, it's good to see account growth. The one thing I think investors maybe looked at and said, what's going on here, is the number of payment transactions was down 5% year over year. But this decrease is mostly from what they call PSP, Payment Service Provider. This is their unbranded segment. So if you go online and buy something, like if you want to buy something from Etsy and there's an option to pay with PayPal on Etsy, that's what PayPal is classifying as branded checkout. The margins on that are significantly higher than their other segments. On the other hand, there are a bunch of apps and companies where PayPal just acts like a behind-the-scenes processor of payments. So for Uber or Airbnb, there's no PayPal logo, but they want a payment processor that's going to accept credit cards and Google Pay, Apple Pay, all that stuff. So for companies like that, PayPal, or what they call the segment is Braintree. Braintree processes the payment, but it's not branded as PayPal anywhere. And the take rate on this segment is very thin. We're talking about a 1.5% to 2% take rate on this unbranded segment, whereas the branded segment, take rates can be a little bit over 3%. And we see that if you look at the payment transactions excluding the unbranded, they're actually up 6%. So the transaction decrease is in this lower margin segment. And this kind of reflects a shift in the strategy of PayPal. They're going for higher margins, they're going for profitability, they're not going for just growth at any cost. And they highlight the fact that branded checkout has been growing well. Payment with Venmo has been growing really well. Not too long ago, they rolled out Venmo debit cards. I think this is a line of business that makes perfect sense. A lot of people, especially young people, treat Venmo basically like their checking account. PayPal should be trying to compete with traditional banks in this space. Again, I really wish PayPal broke out the numbers on profitability for Venmo. Venmo is probably the highest growth segment of this company. If you have to pay someone back, Venmo is the most convenient way. There's very few companies where the name of the company literally becomes a verb, to Google something, to Venmo someone. I think the runway for growth in Venmo is very long, and I expect this to keep growing. But I would like to have more, specific visibility on where the margins of Venmo are going to end up. What is the profitability of this segment? They also recently announced PayPal World. This is their global initiative to basically connect wallets across different countries, across different payment systems. So, if you're someone who lives in China and you have a WeChat account and that's what you use to pay with, or maybe you live in South America and you use Mercado Pago, well, they want you to be able to seamlessly link all these other wallets with PayPal and Venmo so that you can send money, you can spend money, you can receive money internationally without needing a traditional bank here. I'm really excited to see what the demand for this product is like. I think it makes a ton of sense to me. So for example, the use cases could be if you are a shopper and you live in Brazil, you can pay for something on a European or American site using Mercado Pago, because it would be linked with and connected to PayPal and Venmo. If you're a tourist from America and you're going to Spain, for example, you could use your Venmo wallet to pay local merchants there that are tied into this network. Also, I imagine the margins for this segment would probably be similar to their branded checkout margins. So if this actually takes off and there's a demand for it, I think this could be quite a profitable segment of the company. And another area PayPal is trying to go into is crypto. They want people to be able to link their crypto wallets and be able to pay for things with cryptocurrency through the PayPal network. It's cool to see PayPal innovating here. I mean, there aren't many easy ways to use cryptocurrency to actually pay for things in the real world, but I'm not certain how big the demand is going to be here. I'm not expecting this to really become a significant part of the company. But, PayPal is innovating. This is not a dead business. There's a lot of competition in the payment space, but the idea that PayPal is just going to, fade into oblivion, or they're going to be in some state of terminal decline, I just don't see it. I think this was a pretty solid report, probably slightly ahead of most people's expectations. And I'm really surprised that the stock is down, a little over 10% since it came out. So I think it's time we go over to our sheet and see what we could expect for a return on our investment if we buy PayPal stock today. Now, I've done a video on PayPal in the past, and the numbers I have in here are just exactly the same as my previous video on PayPal. We see that in my base case, I had PayPal growing 5% on the top line over the next 5 years. And actually, that's exactly what they hit in this quarter, was 5% growth on the top line. Now, looking at this quarter and what PayPal is guiding for, I think I'm being a little bit too conservative on the operating margin. From my bear to bull case, I was looking at, 15 to 17% operating margin. And historically, that's pretty much about where PayPal has been. But you see, margins have actually been improving recently. The operating margin's currently about 18%. And, if I extrapolate out what management is saying on their guidance, they're not really predicting a margin compression here. I'm going to increase their long-term margins in my base case to 16.5%. And in my bull case, I'm going to increase it up to 18%. Now, coming back to our base case, they are returning a ton of cash to shareholders in the form of buybacks. You can see that I'm modeling out for them to return about, $4.7 billion in cash to shareholders this year. That's actually pretty much in line with what the company is saying. They're saying $6 billion in buybacks, but I'm netting out their share-based compensation, which is a little bit over $1 billion. So the net to us shareholders, I think, is going to be about 14% of the top line, or for this year, that's about $4.7 billion. And as far as a multiple to give to this company 5 years from now, I mean, the balance sheet of this company is fairly good. They don't have much debt. They have stable margins. It's an asset-light business. The top line growth is not incredible, but there is some slow growth here. I think a 15 times multiple is fair for this company. And if these assumptions come true, you're looking at a 16% annualized return, or a little more than a double over 5 years for PayPal stock. My bear case, I think, is really quite pessimistic. Looking at the results of the company today, I might need to improve this because I have them not growing at all on the top line for 5 years, basically saying this is a stagnant company. The operating margins will compress slightly because there's going to be a lot of competition in the payment space. And I'm only giving them a 10 times multiple, which in the event that revenue growth really does halt, this might be fair, but I just think that this is a pretty unlikely scenario at this point. But if this did come true, you would be looking at a 1% return on your money every year for 5 years. So basically, you would be flat on your money after 5 years. That's pretty good for an ugly bear case. I think the downside on PayPal is limited here. Obviously, cheap can always get cheaper. Could the stock go under $60? Could it go down to 50, whatever? Could it be less? Yeah, I mean, anything is possible. You can see that if the price drops or it goes up or it's just different than what it is today, this table right here shows you what return you could expect if the assumptions in our base case come true. So if PayPal drops to, about $60 a share, you're looking at about 20% annualized return over 5 years. That would be excellent. And as far as what the bull case is here, what the upside story for PayPal is, I mean, if revenue accelerates, right now we're looking at 5%, but if that increases to high single digits off the back of PayPal World and Pay with Crypto, and if operating margins stay around 18%, and if I just give this company a 20 times multiple, which I think would be completely fair in this scenario, then you're looking at almost 30% annualized return over 5 years. This scenario would have PayPal stock hitting about $240 a share 5 years from now. So overall, I think the risk reward looks pretty good with PayPal today. Now, this is not a recommendation to buy or sell PayPal stock, but I will tell you what I'm doing with my money, and I'm doing my favorite thing, which is nothing. Not selling my position. I'm not adding more at these levels. I mean, maybe if PayPal dropped down to about $60 a share or lower, I might consider adding to my PayPal position. But the fact is, I think I'm finding better opportunities than PayPal right now. I've highlighted a few on my channel recently. You probably know that I'm very bullish on the healthcare sector. I have a video I'm going to be putting out in a couple days on one of my highest conviction stocks and one of the largest holdings in my portfolio. I think it's an incredibly deep value company. They reported their earnings on Monday. It was fantastic. Some of you probably know what the company is already, but my point is, I think that there's opportunities in the market that look a little more attractive than PayPal. With that said, I'm happy with the position I have. I'm not going to sell. While I think the upside might be greater in some other names, I think the downside is relatively limited on PayPal from here. So overall, that's my opinion. I think the risk reward is pretty good. If you got value out of the video, subscribe to the channel. If you agree or disagree with anything I said here, let me know down in the comments below. And if you own PayPal, let me know, what are you doing with your position? Are you buying more? Are you selling? I always love hearing other opinions, and I hope to see you all in another video.